Hello and welcome to Crypto Weeklies. In this video, we discuss Bitcoin and the current risk level. None of the content financial advice. Right now, price of Bitcoin is at around 75,000. It's coming off at a major area of resistance, this yellow line over here, which was the prior years or 2025's area of support. Usually what happens in the bear market year that this line which held as support in 2025 becomes most likely a resistance in the bear market year. This is what happened in 2022. Again, in 2018, the divergence was slightly different and there was a prolonged bull run in 2017. So we cannot take that as an example. So comparing this bear market with the last one, assuming that this is a bear market, the structural similarity says that again, this time around, again, there were three distinct phases of the bull market preceding that bear market. So the first major area was in the halving year in 2024, and then towards the end of the 2024 and early 2025, there was this major area of bullishness till about late January 2025, kind of similar to what happened in April 2021 to May 2021. Then there was a gap from March and March and April, again slightly ahead of schedule compared to May 2021. This happened in March 2025, 2 months prior. And then towards the end of the bull run, there was a much larger area compared to 2021 in October, November. This time it started from May 2025 and lasted about late November 2025. So that area, that's where Bitcoin made its all-time high for the cycle, kind of similar to 2021. Following that, there was this major rejection of Bitcoin from the 20-week simple moving average perspective. This red line over here, this occurred in October November 2025 itself. In the same month where Bitcoin made its all-time high, there was this rejection from that 20-week simple moving average in late October 2025. Kind of similar first zone that happened over here was in December 2021. And then there was a major counter trend rally in March 2022. Maybe this rally in January 2026 was similar to that rally, although the price did not go above the 20-week simple moving average like it did in 2022 March. In January, again 2 months ahead of schedule, this rally happened. And then subsequently, after that rejection, the price went below the area of support in February, late January 2026, and meaningfully in early February 2026. Kind of different over here, that first drop occurred in May. So 3 months prior was February 2026. Then this price action tried for a much briefer period of time to get back to this yellow area over here, yellow line of support, which was 2021's area of support, which became resistance in 2022. This lasted from early May to early June, so 1 month. But this time around in 2026, this area lasted from early February, now almost the entirety of February, 1 month in, that is in early March, now from that early April, 2 months in early April. Now that we are in late April, today April 20th, we are still in this area over here where the price action is trying to attempt to go above the yellow line, where again the price action is meeting yet another resistance, which is the 20-week simple moving average, which is currently slightly lower than $77,000, and the 21-week exponential moving average, which is slightly higher than 78k. So between 77 and 78k, if the price action were to break out of that level, then Bitcoin would be doing something different from what it did in 2022. Until that happens, it's essentially a similar story compared to that 2020-2021 cycle and in the 2022 bear market. So if Bitcoin gets rejected over here like it did in 2022, the area of support is the 2024 bottom. Following that major rally or major breakout from the December 2023 area of bullishness, this 2024 started really strong for Bitcoin, breaking out of this yellow line. So the highest price the lowest price for Bitcoin in 2024 was 44k. But if we go by the other area where the price action rallies till March, and then from that drop, the area of support was this white line over here, which is ranged somewhere close to between 54,000 and 55,000. If you take the lower end, then it's slightly lower than 50k, that candle wick in August 2024, where the price action held the 50-week simple moving average as a support. So the range is between 50k and 55k if there is a drop in that level. That is, if there is a rejection, if there is something else happening, will be the first to discuss on that. But as there isn't something materially different from the last bear market, it doesn't make too much of a sense to discuss about it before there is some evidence supporting that claim. So for now, the base case, personally speaking, is again waiting for that eventual rejection of Bitcoin at this yellow line, maybe a couple of weeks from now, and then subsequent drop in early to late May 2026. Maybe that penultimate drop that happened in June 2022 could be happening at a somewhat of a similar time period in 2026, and then maybe the bear markets finally align on the time periods which they have been kind of distorted from, somewhere ranging 2 to 3 months. This prolonged time spent in this area is actually, in the larger scheme of things, very bullish for Bitcoin. Although there might be a drop sometime in 2026, this area where the price action has spent a lot of time carving out a bottom, that 60k, the lower 60k level, if in that penultimate drop, even if the price action goes slightly lower, would likely provide somewhat of a similar structure than compared to this area over here in 2024. So long term, that's really good for Bitcoin. Coming back to the model that we started the video with, the time weighted average price model. This is the time weighted average price analysis of Bitcoin with normalized risk levels between 1 and 10. Lower risk levels typically are associated with accumulation, where the price action understood through the gravity of time approach, where each single day price action traded since 2014 is considered to inform that time weighted average price, this white line over here, and accumulating close enough to the time weighted average price, as one could see that over here, risk level 4 or below, or even if you're slightly more, again not financial advice, slightly more risk taking than risk 5 or below, risk level 5 or below. Right now this is in a precarious position, risk level 7, waiting for this level to kind of be behind us, like it was in 2022, around the same drop before that major drop occurred in June, or even that prolonged period in 2018 cycle in that bear market from June 2018 till all the way to about November 2018. This area is typically associated with heightened risk. Again, even in the midst of a bull run, accumulating at this level could mean that again the price you have essentially missed out on the bear market bottom, and in the bear market, accumulating at this level means that there is further more pain coming in the shorter term. So that's the analysis for Bitcoin in the short term using the time weighted average price in model, as well as the technical analysis. The normalized risk score for Bitcoin across all the models still stays high, greater than 0.3 at around 0.34. That is because again the time weighted average price risk is at risk level 7. The decay model, or the regression based model, says that the price is very close to the fair value at around 78k. This is a mathematically derived fair value using regression based principles and non-linear estimation of those principles using polynomial regression techniques to identify where the price action is, cutting the price action into two halves using its own historical price action. The top half is where Bitcoin is overvalued, the bottom half is where Bitcoin is undervalued relative to its previous valuation. Where it gets interesting is when we apply standard deviation residuals to it. So for example, not considering the fair value as a entry point for accumulation, but one standard deviation residual applied to the fair value, this green line over here, Typically, accumulating below that residual is one of the better times to accumulate Bitcoin, like it was back in June 2022, starting that drop, accumulating below this green line, or even in the bear market of 2018 and 2014-2015 recovery, accumulating at below the green line in 2026 could make more sense than at the current levels. This regression based nonlinear estimation of undervaluation zone is coming at around 59k. So if and when price action drops below that level, that's where Bitcoin becomes more and more lucrative. Right now, Bitcoin holds a lot of weight in the overall asset class. This is the Bitcoin dominance. It's close to 60% right now. Bitcoin being close to 60%, ETH being close to 11% means that apart from these two assets, there isn't much happening in the asset class less than 30%, and out of which a significant portion is garnered by stable coins, which are essentially, again, for all intensive purposes, although they are crypto, they are tied to the fiat currencies on which they are basing their valuation. So more than 70% asset dominance is held by Bitcoin and Ethereum, and one could argue another 5 to 10% is stable coins. So less than 20% weight to these altcoins. That means if the market cap weight is less than 20%, the attention span for these altcoins also needs to be less than 20%. And just to keep everything in line with what typically happens in the bear market for Bitcoin is where Bitcoin's market share typically of the entire asset class typically goes higher than lower. So for example, over here from the 2018 bear market to this 2020 bull run, the asset at market share of Bitcoin grew continuously. This time around, even since 2022, one could argue that there wasn't any alt season this time around. That's why Bitcoin market share stayed elevated throughout the bull run. So that's something worth mentioning. So in terms of the overall asset class risk, the peak valley interpretation of the overall completion of the or overall, this says bull market completion, but this is again overall composite risk score of all the of all the crypto market. Whenever in the bear market, this is in lowest risk. Like right now, it's in the lowest risk area. Like it is, it's worth identifying those time periods, even though in 2026 largely the overall risk has been less than 0.2 or in the lowest risk territory. Typically in towards the end of the year of these bear markets is where the risk level falls less than 0.05, that is less than 5%, or even less than 10% makes much more sense than at 20%. So that's something that could happen in this year. In terms of the overall portfolio of the crypto efficiency frontier or efficient frontier, these assets on this top left are the gems of the asset class, Bitcoin being one of them. ETH is at the boundary, and these other assets since 2021 have had better annualized return than the danger zone over here, or in the negatives return since 2021. These assets at the bottom are typically associated with underperformers or the ghost zone, one which would which typically means the volatility is high and asset or the annualized return is negative. This 0 is the cutoff over here, but the cutoff for the gem zone is this dotted white line over here, which is somewhere close to 20% return annually and volatility less than 0.9 or 0.95. So where is Bitcoin right now? At the third spot in terms of the gem zone. Tron and Toncoin have had better annualized return and the risk score in the last 4 or 5 years. But if you weight it by market cap, Bitcoin in that safety zone is worth about 40 to 45% of the overall crypto market heavy allocation gem zone in the asset class. So with that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and hope to see you again tomorrow. Thank you and have a nice day.